So let's focus on another corporate, SOBHA. The company has clocked its best ever pre-sales in FY24 and highest ever collections as well. Mr. Jagadish, the MD of SOBHA, joins us to discuss more on the past quarter's numbers as well as the way ahead. Hi, sir. Morning, and thanks a lot for joining in. Well, FY24 was aided by strong launches of around 7 million square feet odd. What is the pipeline for the coming fiscal FY25, and how much of it would be in Bengaluru and other geographies?
Thank you, Nigel. We are very happy to state that we have delivered about 7 million square feet last year, highest ever we have done. And going forward also, we have very robust pipeline of launches. That's about 9 million square feet minimum is what we expect to do in about 10 to 11 projects across Bangalore, Gurgaon, Tamil Nadu and Kerala. These majority of the launches, about 50%, 50 to 60% of these launches are in Bangalore, remaining spread between Gurgaon and Tamil Nadu and Kerala.
Okay. So, can you tell us, okay, 50% you said is in Bangalore and the rest are spread across other geographies. Got it. In terms of land acquisitions or buys, what is the expectation? Your land-related payments were up almost 3.5 times quarter on quarter at about 210 crores. Will there be more spends in terms of land buys? If yes, what is the strategy that you're looking at?
Yes. If you see our overall strategy in terms of managing cash flow and investment in future, for the last 14 quarters, we have reduced our debt by about close to 1,800 crores in cumulative. And particularly in the last few quarters, we have started seeing that there is enough cash flow for us to invest in future. We had a net debt target of 0.5, which we achieved. And from here on, we think that we will have enough cash flow to invest in new opportunities across geographies. Last year we did about net investments of about over 450 crores, and that we think that we should be able to do in the future years as well.
Okay, and your current debt is at about 1,260 crores. So going forward, do you have any debt target? I mean, where do you think you can end the year with in FY25 and 26? Can you bring it down further?
Yeah, like I said, directionally, the debt would be going towards a lower number. But as we have become comfortable from a net debt to equity plan, the focus would be more on increasing our spends towards construction for faster completions and towards increasing our allocation towards new opportunities.
Jagdish, hi, good morning. Prashant here. Good to see you and hope we get this opportunity to speak with you more regularly, not just around results. But, just a word on margins, Jagdish, if you can. Because, from 11%, 10% to 8 point something now, what's the outlook? What's the trajectory going to look like through FY25 and beyond?
Fortunately, yes, the margins have come a little bit lower in the past year. Typically, the revenue and the margins in real estate gives a far view of the rear view mirror. The operating cash flow gives the current view, and the remaining revenue to be recognized gives the front view. And in our case, we have about 13,500 crores to be recognized from the past sales that we have done. Those we think that we will be able to achieve far higher margins between 25 to 30% at a project level. And as we complete these projects and start recognizing those, our margin should definitely improve.
So go back to the at least double digit?
From a PAT point of view, from where we are, we should move
EBITDA,
at least.
From an EBITDA point of view?
Yes, EBITDA point of view, again, we were earlier at about 20%. Now we are down to about 12.5%. We should we should move towards that in the next few years.
Eventually.
Yes.
Okay.
Okay, we will let you go on that note. Thank you so much for joining us. That is SOBHA talking about their business, but the stock is under a lot of pressure actually. Down almost about 6% right now, so underperforming the market as we speak. Could also just be about profit taking because these are stocks that have done well in the last month or so.